the 20th, 2013. My name is Michael Wright, and this is the midweek webinar. Just before continuing, if you're watching the video, please do pause the recording and read over the risk disclaimer. For those here with me now, please do scan over the disclaimer. All right, let's get the ball rolling. So we have one open trade so far. That one open trade is the long euro dollar. Stops already at break even. Um, I think as you guys can see, been pretty haven't been too aggressive with recent trades. Obviously, there's too much choppy price action. I don't need to take a trade just to take a trade. So it's always better to be cautious, especially when you understand that. So I'm gonna leave that at break even and see how the market plays itself out. Um, really, only trades I'm looking to really take. I'm keeping eyes on a Kiwi dollar, right? Other than that, that euro dollar, we'll see how that plays out. It's at break even. Nothing more to do than that. Kiwi breaking down thus far. Uh, so is respecting these upper bounds of this descending area here. To call that a bottom, maybe a little bit too early. And then when I say call that a bottom, I mean that 81.58 zone, okay? But we do break to the top side. If we do break to the top side on that 4-hour chart, then we open up 84. So I'm looking to get long on a 4-hour close above 82.50 with my average 40 pip stop and my target of 84. So could this be a bottom? Now that's a question that lies, right? And it it looks like it's developing in a wedge, okay? Obviously on that 4-hour chart I just showed. And then we could still break down into 81.20. I'm not negating that. Obviously with that 4-hour development there, you could still play that bottom side. Um, so I'd rather wait and see though. Like obviously that short was missed, like that 82.40 zone would have been optimal. If you are short from there, go to break even already. We still have that open gap. It's not filled just yet, and we can see the same thing with the Aussie dollar. Okay, Aussie dollar still that gap is there. Indeed, I'm glad that I closed it because I probably would have got stopped out of that Aussie long. A lot of spikes back and forth, right? And let's look at that, right? So yeah, what took me out with the spread. Yeah, I would have got taken out. Yep. So I'm glad I closed it out when I did. But at the same time, I remember earlier when somebody had asked me why did I close it, the setup was negated, right? Basically, the original setup was off of this taking Kijun cross, held for quite some time, but not enough to get to break even, and then it flipped to the top side. So when I saw it, I don't need for the market to take up my stop. I'll just close it with a small loss and move on, right? One thing never to do is fall in love with a trade because another pretty setup will come eventually. And that was the case, I think, for the euro. We got a nice entry and went to break even pretty fast, so then it becomes a wait and see approach. You can go about your day, whether it is family or work or etc. Okay. Aside from that, I want to take a look at the. I want to take a look at the Kiwi dollar. With well, Aussie Kiwi, because then it plays which one is stronger. On a longer term time frame, we do have the Aussie Kiwi broke out, retest, etc. Now going forward, um, the divergence is starting to become apparent, but we need a 4-hour close below to get a breakdown. All right, Everybody with me so far? All right. Meanwhile, speaking of the crosses, Euro Aussie, very interesting because indeed I'm bullish the Euro, obviously, off of that setup. Um, but at the same time, still not overlooking the fact that we still haven't fully met that 261 extension. Okay, um, comes in just around 123.50 ish. All right. Uh, so not ruling out the case that the Aussie could gain some strength. All right. Euro Kiwi on that area still has that nice base. Okay. Uh, now we're seeing a triple bottom. Uh, Not really my setup, so to say, in terms of horizontal support and resistance, but this one is a little bit too clear. All right, so if we break and we retest 156, so when I say break, I mean a downside breakout of 156, then in my opinion that could open up some downside. But then obviously that's the same viewpoint that we have for the other pairs as well. This is the Euro Kiwi. All right, so I'm looking at all the Kiwi crosses. First, I looked at the Kiwi dollar. All right, we say this is still respecting the top end. Um, I really don't want to bottom pick this, but one other factor to know for the Kiwi is that on a 4-hour basis from Ichimoku, that future cloud is thin, looks a little bullish, and the taking is still above the Kijun. So I really don't want to get short, but not ruling out a further breakdown. All right. And then you look at it back from here, I'd rather wait for confirmation to get long 82.50 above. All right, if it breaks down, so be it. I just rather play topside. All right. Now the Aussie, it's a bit interesting in a lot of ways. So this, in my opinion, could be a fourth wave triangle. You see? And I'll show you exactly what I mean. All right. Now triangles are usually continuation patterns on average. All right. You of course you have exceptions. That's the case, but on average they're usually fourth or B wave triangles and they're continuation moves. So I think we could all establish that the continuation to the top side. Next clear resistance is the trend line at 104.50. So after the webinar, I may put limits to get long at the bottom edge. I'll put it for 103.60. I'll put a 40 pip stop, 103.20, and then I'll target 104.50, right? So risk reward still in our favor, a little bit more than 2 to 1, okay? But looking at that edge, looking for that last continuation, looking for some further divergence, and then a turnaround there, all right? So that's probably the only future setup that I like in terms of risk to reward and looks well as a setup. Just write this down, right? And it's a clear triangle in my opinion. And then with that being said, so long as the Aussie Kiwi remains afloat, and then we're expecting the Aussies to be stronger than the Kiwi. However, if it does break support, I don't mind taking the Kiwi later on. And the Kiwi I do prefer because here, that 84, right? It's a big zone. It makes sense to target that area because 84 is the 61 on the recent downswing. It's the back test. There's a lot of areas. So whichever the case comes, Aussie may come first. Let's go back to that. Right? Aussie may come first if we break down to support, because then I'm bottom picking this, and then Kiwi will soon follow up. So then by the time I go to break even on Aussie, I'll have two trades with break even, then I can take a third trade. Right? Do you all understand that risk management on that scenario? Like, I don't like to take, um, I got a email recently, and it was I should take more trades to meet whatever pip goal. Me taking 5-6 trades per day is actually not. It does not bode well. Or anybody taking 5-6 trades, because if you look at it, you have 5-6 chances to get stopped out. I respect the market, and unless I could go to break even, etc., it just doesn't make sense. Right? Does everybody understand that? Right? We have the same goal, um, but let's be honest, risk management is key. Right? We're in the game to stay in the game, not to throw money away. All right. And sometimes it's best if you take a trade just to walk away from the computer, go play with your children, go back to work, and let the market filter itself out. Because then you become too emotional in that trade. Easier said than done, but once you get the hang of it, you just it becomes more natural. All right. The yen pairs, all right. Interesting here as well, because I see dollar yen coming against some clear resistance not too far away. Euro yen playing out to be the same thing with that gap fill too. Aussie yen also the same. All right. Aussie yen coming across some top side just around the 78.6 fib. I probably won't look to play that short, but divergence is beginning to get clear. Watch out for another high. I'm staying with the dollar pairs. I'm letting the yens continue to chop around. We'll let other people play around with it. But for me, focus lies. Again, I'm gonna probably pace orders to get long the Aussie, and then the Kiwi. I'll wait for a break of resistance. So that's really it in terms of like potential new trades. And then the euro will just stay pat and see how that begins to play itself out. Um, with the euro more specifically, again, uh, should it start to gain some headway, we have targets for 103.80. It's just a little bit above that open gap, right? Remember, we gapped down on Sunday, so that still remains open. Okay, and then we'll just look higher. It could potentially even get further than that. I may change the targets, so don't rule that out. We are holding this 261 fib. You can see it a little bit clearer on that we held it on the day. We broke out on the 4-hour, but the daily is the one that we really care most about. And then I'm still interested to see if it can run up to 138, because that 100% fib never fully got hit, right? I'm not saying it will, but never fully got hit. And on this setup, still got the A. I'm still looking for that measured move. So now ruling that out. I probably won't target that area, but I will modify it enough. Yeah, you see here. So I'll put this back. But we held the 78.6 fib, right? You see that here. You see the wicks, right? Does everybody see that? Yesterday we had a wick. Today we bounced off of it. Now what we need next is get some momentum to the top side. All right. So if I modify it, I probably won't get that aggressive with 138, but I probably look for 132 because we get a 4-hour close above 130.20, then I wouldn't say smooth sailing, but then we'll lock in a lot of pips though. We'll lock in close to 70 pips, and then we could just let it go, right? Because then we'll open up the time frames, and then by then we'll be above the 4-hour cloud. We may see a taking key cross on the 4-hour. This is later on; it's not happening yet. So obviously we need more price action, but that'll be the case. And then, because then obviously, if we break out here, then any back test is a buy, right? As a kiss. So whereas we got from the bottom, we could just hold that and then look for add-ons and then target 132. Make sense? And then in this position, it's a nice carry, right? You're gaining interest for each day you hold it. So we're making money just by holding a position. So we could easily turn this into a nice swing trade. All right, David, you with me? Greg? Greg said yes, awesome. Basim, you with me? Mr. Weston? Philip? Robin? With me, guys? Awesome. All right, so that's a play for the euro. Again, it's at break even, so um, it just becomes managing the position. Obviously, it will be easier later on once it starts to make some moves higher. And then other than that, just the Aussie and the Kiwi, keep an eyes on. So if that being said, anybody have any questions for me? Any questions? One thing to notice too here is this double bottom. So even 132, you can see um, if anybody was looking to play at head and shoulders, the right shoulder won't come until at least 133 anyway. So 132 is not a bad target in my opinion. Greg says, I like your style of trading. Mike keeps the powder dry until a good setup comes. Yeah, I'm not gonna force an issue. Um, like I know I closed out the Aussie and took Euro pretty fast, but it looked like Chris was turning on across the board. So if I'm wrong, I'm wrong. But hey, we're in the trade and just babysitting now and then. It's all about the setup, guys. And I don't know, for me, I had no idea about the news. So it's the setup. All right. I think with that news came out, if you're a news trader, you just got a couple gray hairs because the market did nothing. It went back and forth for a couple hours, and you're right back to where you were at. All right. So, all right. But that's what we're looking to play. For those of you guys in the chat room, I know Liam talks about a lot of setups in the room. Chris and I, we just really stick to trading, putting alerts out as such, and nice balance we have here. And then we all talk about trades in the team room. So if there's nothing, there's nothing. But if there is, we'll be sure to acknowledge it and see where we could take advantage of such. But some says, what about Aussie CAD? You know what? I know. I think you were asking me about that in the room as well, right? Still holding support. So until it's a long until it's not. If it breaks down, then obviously. So like, let's say for example, if obviously I could be wrong with this Kiwi, but I won't be wrong in that I won't lose money because I'm not taking the long now. But let's suppose it never breaks higher and then it continues to drift lower. Then we would expect the Aussie dollar to do the same thing, right? Because it's a commodity partner. At the end of the day, so I'm still gonna play that triangle. But if it breaks to the downside, then Aussie CAD should break out, and then I'll be getting short Aussie CAD on that breakout. And Aussie CAD is probably one of the most clear, not clearest, but we have this very, very deep divergence. And then you could even see that wedge. So, but it could be the case of just a strong Canadian dollar, right? Because with the CAD, you see that same divergence. Okay. Any other questions? So, so basically, overall, on the radar, Aussie dollar, Kiwi dollar, Aussie CAD. All right. Anybody else have any other questions for me? Nope. All right. Let's wrap this up. Pretty short and sweet webinar today. Um, keep an eye as such. I'll place those limits somewhere. I don't know shortly. I'll post the recording later on. Send it out email as such. And let's see how the market plays out, guys. All right. Cheers. Thanks for joining, and we'll chat soon. Adios.